Hello and welcome to Gradient's weekly roundup of key economic and business developments in Sri Lanka for the week ending 13th January 2023. I'm Nishani Figuera. Let's first take a look at the top stories for this week. Economists and development experts allege funds and investors holding up help for Sri Lanka. World Bank says Sri Lanka will contract 4.2% this year. Sri Lanka expects influx of Chinese tourists amid surge in COVID. We will also briefly look at other notable news and wrap up with the capital markets update. In our main story this week, 182 economists and development experts from around the world have published a statement alleging that some of the world's most powerful hedge funds and other investors are holding up vital help for Sri Lanka with their hardline stance in debt relief negotiations. The experts pointed out that instead of geopolitical maneuvering, Sri Lanka's creditors must ensure debt cancellation sufficient to provide a way out of the country's current crisis. They added that such action would be a test case of the willingness of the international community to tackle a looming debt crisis. They also said such lenders charged a premium to lend to Sri Lanka to cover their risks, which have accrued them massive profits and contributed to Sri Lanka's first ever default. The group includes personalities such as Jayati Ghosh, Thomas Piketty, and Greece's former finance minister Yanis Varoufakis. The World Bank is projecting Sri Lanka's economy to contract 4.2% this year. The development lender noted that the fluid political situation and heightened fiscal, external and financial sector imbalances pose significant uncertainty for Sri Lanka's economic outlook. The decline forecast is higher than Asian Development Bank's prediction of 3.3% for the island nation. The World Bank added that fiscal consolidation, debt restructuring and growth-enhancing structural reforms would impact growth outlook, further commenting that Sri Lanka will see positive growth only in 2024, but to expand 1%. Opening of Chinese borders is expected to significantly increase travelers to Sri Lanka amidst a resurgence of COVID in the world's second largest economy. While many Asian countries have imposed mandatory tests for Chinese tourists, Sri Lanka is yet to make any preparations, according to Priyantha Fernando, the chairman of the Sri Lanka Tourism Development Authority. The SLTDA reported that 20,785 tourists arrived during the first week of January. This is almost on par with that of the same period last year. In other news, President Ranil Wickremesinghe has ordered all ministries to cut 5% from the allocated budget for 2023 to manage expenditure, while the Samurdhi payments could also be delayed up to 2 weeks, according to Cabinet spokesperson. Such action is due to the option to print money to fund domestic expenditure being limited, as lending agencies involved in debt restructuring have advised Sri Lanka not to do so. Sri Lanka is opening up the lubricant oil market. The proposal is to market high-quality, innovative products and allow competitive prices. Currently, there are 26 players in the market. Mathala Rajapaksa International Airport is being transformed into a multi-purpose business center. Expressions of interest are being called for business opportunities related to air operations and other non-air operations using the facilities at the airport. Now let's take a look at the weekly movement of the All-Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury Bill auction held on Wednesday, yields on all maturities fell for a third consecutive week. Of the 226 billion rupees worth of bids, about 88 billion rupees were accepted. And here's how the rupee performed against the dollar this week. And that's a wrap for this week. Do subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.